No. So become excellent at doing one thing.
Do you give a higher priority to building entry signals, exit signals, or money management rules?
So I think you did refer to that one, but certainly money management, where money management encompasses the whole aspect about the financial mathematics of a trade, risk reward, sizing, time on trade. I have a whole bunch of additional matrices that I measure. You know, how long are you in the trade for? Many people don't include that at all. In fact, I think I'm the only one who does in terms of money management. Time in trade. So I look for a market, I actually draw a market efficiency line, which is the entry point to my exit, and I look for the maximum angle up from that entry point to exit. That means the least time for the biggest gain. Staying in 4 times longer for 20% more money is actually less efficient. So I actually have a measure of efficiency for trade efficiency as well.
Well, what do you look for when markets make new highs or new lows?
Essentially, I'm only looking for my setup. So a new high or a new low just means that the trend is still in play. I do look at the degree that the low has been made. If it starts pushing back a lot earlier, when you stop making lower lows by a greater significance and they start getting only marginally lower, I'm less likely to go in rushing in short, because it probably means that the momentum on the downside, while still down, no longer has the same rate of downside. So then I would either wait for a continuation pattern to form, which means it needs a breath, it'll set up, and then it'll smash down. We've called excellent shorts on gold from $1,400 with a $270 move south side down to the 1200s, doing exactly that, bear market, bit of a rally, set up, continuation. So you can trade short if you get the continuation, but you can also then get a bottoming pattern. So wherever you're seeing a reduction in momentum, you've got to watch for the possibility of either reversal or a continuation setup. So that's when I tend to get interested, because I believe I'm good at identifying what is a reversal and what is more likely to be continuation. And in the most cases, it's continuation as well. So it's interesting from a point of view that the trend is still in flow, so new highs, new lows.
What's the average leverage that you normally use and the maximum leverage?
So I don't tend to measure specifically leverage. I measure unit of loss on account. So if I get an entry point that I agree, if the market takes out that level, I'm a buyer, and I have a tight stop that's over there that says if it trades through that level, I will cover and close the trade. I then say, right, that is how much? It's 10p. I'm allowed a £1,000 loss because it represents 1% of £100,000. What does that mean? I can trade, if it's 10p, I can trade £100 a point. Simple as that, because the movement from there to there will then spend me my 1,000 loss. So each time you write the check for the agreed maximum allowable loss, if you have variations in your money, you have 1%, 2% and 3%, and you, depending how attractive the pattern is, you have a scoring system. If it's a beauty queen that qualifies for a 3% risk, then you would trade £300 a point and lose 3,000. So write the check for your allowable loss. So be optimistic and trade for your target, but plan for your loss. So the loss is the unit of loss, and that is it. So it doesn't matter what the leverage is there. If I've got it really tight, I might be able to get quite a large amount of leverage. But the total loss to your account must be within your managed loss amounts, and everyone should have a maximum loss that they're prepared to take on any individual trade.